Ladies and gentlemen, good day and welcome to TCPL Packaging Limited's earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Jenny Rose from CDR India. Thank you, and over to you, ma'am.
Good evening, everyone, and thank you for joining us on TCPL Packaging's Q2 and H1 FY26 earnings conference call. We have with us today Mr. Akshay Kanoria, Executive Director, and Mr. Vivek Dave, GM Finance of the company. We would like to begin the call with brief opening remarks from the management, following which we will have the forum open for an interactive question and answer session. Before we start, I would like to point out that some statements made in today's call may be forward-looking in nature, and a disclaimer to this effect has been included in the results presentation shared with you earlier. I would now like to invite Mr. Akshay to make his opening remarks. Over to you, Akshay.
Good evening, everyone, and thank you all for joining us on our earnings call. I will initiate the call by taking you through our business highlights for the period under review, after which we will open the forum to a Q&A. The operating environment during the period remained challenging, with softer domestic demand and ongoing volatility impacting export markets. Against this backdrop, our performance remained stable, supported by our diversified business model and consistent operational focus. For Q2 FY26, consolidated revenue stood at 461 crore, while half one revenue was 885 crore. EBITDA for the quarter was 69 crore and 142 crore for the half year, translating to margins of about 15 and 16% respectively. PAT came in at 29 crore for Q2 and 51 crore for half one, while cash profits stood at 59 crore and 107 crore respectively. The revision in GST slabs during the quarter resulted in short-term recalibration across parts of the trade channel, which contributed to softer demand in September. This transition has largely normalized, and we expect the rationalized structure to support improvement in underlying demand in the coming period. Our Chennai greenfield plant continues to ramp up well, supported by encouraging traction from regional customers. Overall customer engagement has been strong, and approvals from several large accounts are currently progressing, which will further aid the scale-up as they come through. The facility significantly enhances our presence in southern India, strengthens our capabilities in sustainable paperboard packaging, and we expect it to reach good utilization levels over the next few quarters. As we look ahead, we remain focused on strengthening the levers that will drive the company's next phase of growth. We are optimistic about the prospects for demand improving as the GST cuts take hold, and are encouraged by recent news of positive progress in the trade talks with the USA and the EU, besides many other countries, that can provide a positive fillip to the export business and will also add to the momentum in the Indian economy in general. Besides, we are also continuously evaluating a set of strategic initiatives to reinforce our long-term growth aspirations. Backed by our strong balance sheet and deep customer relationships, these efforts will enable us to build scale, address emerging opportunities, and position the company for sustained healthy growth over the medium to long term. On that note, I would request the moderator to open the forum for any questions or suggestions that you may have.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and two. Participants are requested to use handset while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. First question is from the line of Rohan Kale from InCred. Please go ahead.
Hi, Akshay and team. As per our estimates for the quarter, we would have done a high single-digit growth in the domestic business. How is it panned out, let's say, from October onwards, considering September would have been weak? Are you seeing, let's say, higher orders from existing customers due to the GST-induced pack size changes?
Still in October, there was a lot of disruption because there was still a lot of inventory correction going on. but it's normalized now. And like post the Diwali season getting over, things are improved. But the loss of the Diwali season is like a permanent sort of loss, because there's a lot of Diwali sales and gifting and those kind of things which go on, which if you lose that season, then you lost it permanently. No one is buying that on a regular basis. So that is unfortunate, but generally speaking, the demand is stabilized, and now we are able to understand some trends. But the last couple of months, it was very much dependent on individual customers and the product line which they had, whether they were affected by GST or not, and how quickly the customers adapted also with the new pack sizes or the new prices. So a lot of people took time to make up their mind, whether they want to cut the grammage, increase the price, etc. So that was like a 2-month kind of disruption which we have faced.
Right. And on the export side, the first half has broadly been subdued for us. Are you expecting it to recover in the second half? And from your read of the situation, is it temporary? And sort of, are we confident of crossing the FY25 levels for the full year this year?
Yeah. So I think we don't really have a handle on what's going to happen in coming quarters or months. So overall, in terms of our share of business or general customer relationships and all, there's no major change. It's just like a little bit of disruption this year in with those markets, and we've had a couple of very strong years of export performance, so this was a bit of a correction sort of thing. So hopefully next quarter or two we can bounce back, and slowly it is sort of the drop is sort of lessening. We had a good traction building up in the US, but then obviously with the tariff situation there, that got knocked. But hopefully now things can get cleared up in the next 1 or 2 months. The news that we're hearing is quite encouraging. So we're just looking forward to that.
Sure. And the last one, in terms of, let's say, our medium-term growth outlook, what would that be, and which segments do you think would drive it? Would it come more from cartons? Would it come more from flexible packaging? And your outlooks on margins as well.
Yeah, so of course we don't give a number, but our aspiration is high, mid double-digit sort of growth rate in top line with better improvement in bottom lines. And our carton and flexible should both grow at this kind of rate, although flexibles have been growing faster last few years from a lower base, and that continues to be the case. But we see, hopefully now with the domestic demand environment improving, the carton business should be able to contribute better. That's the hope. And the margin, of course, will follow.
Right. Just the last one from my end. Are we expected maybe to get into any other segments in the near term? Any adjacencies?
So nothing I can point to right now, but we have a lot we are working on at any point of time, but then it has to really make good sense for us. So there's, we are always looking at and working on various opportunities, but have to pan out properly.
Sure. All right. I'll get back to you. Thank you.
Thank you. Next question is from the line of Bhavya Nahar from Tamora Investments Managers. Please go ahead.
Hi, you mentioned that the revision in GST slabs led to some short-term recalibration. Could you quantify the impact of this transition in terms of volumes or value if possible?
Very difficult because it's like a opportunity loss. So how to quantify? And it's dependent on the customer, meaning different customers have had different reactions to the GST cut in their supply chain. So like we have 1 or 2 customers who still today haven't figured out, what they're going to do. whether they're going to cut the grammage or reduce the price or what combination of the two. So it's really hard to give you an answer. And then there's this Diwali, like if you lose the Diwali season, how do you quantify that? So it's not possible for me to answer that question.
Okay. Thank you. That's it from my side.
Thank you. Next question is from the line of Pawan Kumar from Ratnatraya Capital. Please go ahead.
Hi, Akshay. Can you outline the capacity utilization within the cartons and also the packaging films separately? And secondly, I also wanted to understand the reason behind the higher financial expenses. Is there something different that has happened this quarter? And what is the sustainable kind of run rate on the financial expenses side going forward?
So can you repeat that second part again?
What is the sustainable interest rate expense or the financial rate expense going forward? And this quarter, the interest rate expense was very high. I wanted to
Generally,
understand.
our bank borrowing rate is between 8 and 9%, so that continues. And obviously, if the top line growth doesn't translate, then the interest portion as a percent will be little higher side. But that is okay. I mean, that's manageable. And overall debt and all is also not growing in terms of the ratio. So that's under control. It's just a matter of a little bit top line growth should feed in, and then that will get sorted. And as far as the utilization is concerned, in the carton business, we're more at like, I'd say overall we're at about 70% odd utilization. So there is a good room for the expansion in the top line without much capex. But of course, it's not always everywhere that you're at the uniform level of utilization. So some units we are more utilized, some we are less. So obviously depends.
Okay. And can you just outline what is the kind of utilization on the flexible line also? Yes.
Yeah, I think that data we don't give, but in the flexibles we have a good capacity free yet. So we don't have any capex planned in the immediate future, except for some balancing equipment and some specialized equipment and all required. And we are a little bit expanding the building to make room for future growth. So overall, there also we have some capacity free.
Okay. And one last thing from my end, on the export side, I wanted to understand, is there any specific reason why the rate has slowed, and what is the kind of maybe the growth rates that can be expected on this particular side going forward on medium to longer term? What are the kind of rates we are looking at internally?
So with the export, we don't have any guidance as such that we give for growth, because it's a very not in our control sort of thing. With the domestic market, you're much more sure because the factors are more clear to you. Whereas export, there's various other factors which are totally out of control. So we have a bit of a...
Is there anything which has made us lesser competitive than the peers in the export market, or is it just like a cyclical downturn?
I think it's more like a cyclical downturn. Nothing specific to say in terms of competition. Yeah, of course, China dumping is going on all over the world, but in our kind of industry, it's not such a big concern. But apart from that, there's nothing new. I mean, obviously, all the mess up going on globally because of the tariffs and the volatility, and there's so much war and disruption everywhere. So overall, global markets are a bit gloomy, but yeah, it's mostly cyclical downturn, I would say.
Okay. I'll come back to this.
Thank you. Before we move to the next question, a reminder to the participants to ask a question. You may press star and one. Next question is from the line of Bhavesh from DV Investments Advisors. Please go ahead.
Hello, am I audible?
Yeah.
Yeah, hi. So, couple of our peers in the domestic market have been expanding their capacities. So, do we see this any threat to our margins going ahead in the next couple of years? Any supply pressure you are seeing?
So in our business, there's always going to be competition. But I think it's sort of bottomed out, the kind of aggression, the competition. I feel that there's a bit of a correction in the attitude because people are understanding that one has to retain the fundamentals. So I think it's okay. I mean, it's manageable right now.
Okay. And secondly, on the export market, I think in the last previous call, we have mentioned that US is not a greater chunk of our export. So, can you throw some light how was exports in this quarter and what were the other geographies where we are supplying?
So we don't give breakup for obvious reasons, but the US, we are not doing much today, but there was a lot of scope for growth. So there was a lot of development in pipeline. That has all stopped, so that's a problem.
Oh, thank you.
Thank you. Next question is from the line of Rangan, an individual investor. Please go ahead.
Good evening. Good set of numbers. For the first time, I think I am seeing the turnover becoming less. And no doubt I appreciate for the cost of raw material come to about 57-58%. But what is eaten away by that, the employee expense and the finance cost. And I would like to know that whether you got any good orders from the iPhone or something like that, because Sriperumbudur is nearer to Chennai, and have you made any application for that? And any big ticket clients are coming, please take that. Then I would like to advise you that all along I've been advising you that at least you should place the market actually placement. About 10 lakh shares, about 3,000 rupees, you will get about 300 crores. And you can reduce the interest. I think you can ponder over this. This is my suggestion. Because a promoter's quota, percentage will not come that drastically. So you have to think on that line. Because you are paying very high interest these days. I have seen that. Otherwise, what will be the current year? Actually, you will be passing at least, you will be able to maintain the 1742 crores of last year, what you have made. I would like to know that. Thanks very much.
All right. Thank you very much for your suggestion on the raising capital. We'll take it into advisement. And on the customer specific, we don't comment on the conference call, so I would comment on that. And obviously, if the top line is not growing to the expectation, then the other costs are growing. So they will squeeze down the bottom line. That's natural. But the top line should grow. So that will get sorted out in due course. Thank you.
Thank you. Next question is from the line of Pawan Kumar from Ratnatraya Capital. Please proceed.
Sir, can you throw basically some light on how the subsidiary is performing? I'm talking about the InnoFilms, which has been integrated into TCPL now, and also the creative offset. If you could give us some number on what was the utilization or revenues from that in this particular quarter, and how do you expect to see this going forward, maybe 6 months or 1 year down the line?
On the InnoFilms, we are quite encouraged by the developments that our team is doing. in the R&D, and there is some good traction on some specialized products which we are developing with that capacity. So that is playing a role in our flexible packaging growth. So that we are quite encouraged, and the machinery and all has stabilized. So there's no major concern there. It's picking up steadily. On the creative side also, there is a growth in the revenue and therefore a drop in the loss and improvement in the cash flow and all that. But still it is way below our expectation, that's to be frank. So we are working on various new customers and various new product lines and trying to improve share in several existing customers. So we are hopeful that this improvement will continue and it will start giving profit in coming time. But definitely it's not up to the expectation.
Okay. And just to be more specific on InnoFilms, so is it like previously we were utilizing it to produce normal packaging film? So have we gone to the recyclable film and the production, and how much of that particular plant's capacity is recyclable film as of now, InnoFilms that we are producing?
So the ratio I can't share, and it's now no longer a separate company. It's part of the flexible packaging business altogether. But the line is certainly now being utilized on various innovative films. And we have a lot of product under development in pipeline. So we are seeing some traction, and hopefully in coming months there should be a good volume that we get.
Akshay, can you just indicate maybe have we crossed 50% at least?
Sorry?
Have we crossed 50% in terms of recyclable films? At least if you can indicate that. In terms of production, if you are producing 100 in, say, InnoFilms.
I understood. Hi, Vidur here. Hi. So, thanks for your question. So basically, the push of the use of recyclable packaging in India has sort of taken a bit of a backseat because the government hasn't really mandated the use of recyclable packaging. It's more surrounding the use of recycled content. And certain brand owners, such as Nestle, Unilever, etc., they have global pledges to use recyclable packaging. So they are doing it in a small way, but it's not gone full-fledged because the government doesn't mandate it. So there's no real reason for them to shift to recyclable, but some people are doing it because, they do understand the benefit. So that's the reason why, it's not taken off in the way in which it maybe should have. But having said that, we are just a small part of the overall market. So our progress is quite decent, I would say, in this regard. But, obviously, it's not like a major product for us right now. But we are qualified and, the quality and everything is very good. So when the time comes, we will be well placed to capture the demand.
And also a lot of export customers want this recyclable packaging.
Yeah.
So that is also encouraging.
But overall, it helps our entire flexible packaging business because it increases our offering a lot for domestic as well as export, and it's quite a high value, high tech product. So it's not easy for everyone to do.
Okay, great. And one last thing on the creative side, do we have any kind of indicative timelines by which we can hit, say, potentially 100 crores of revenues on the creative side? Because it has taken quite a while, but I understand you might be getting some inquiries from new customers. So can we see a number of 100 crores annually on creative side soon?
I can't give any guideline because last time I gave and it didn't happen, so then I don't want to give one necessarily this time. Okay. Thank you.
Okay. Okay. And one last thing, is any CapEx indication for this year and next year?
Yeah. Sorry, one second. Yeah. So we have about 100 plus crore of capex budgeted this year, and a lot of it is going into land building for enabling future capex, and we also have the new cylinder factory which will be commissioned in this quarter. So that is almost fully done, and the other ones are in various stages of progress. And then we have some balancing equipment and some specialty equipment which we're putting in various units.
And how much of this 100 crores might have been already been done?
A little more than half.
Oh.
Yeah.
Oh. And even the next year, you expect similar kind of run rate, or we don't have any idea?
Next year, abhi too soon to tell. We'll see. Let's see how the next 6 months goes. I'll tell you in the Q1 call.
Okay. Well, good luck, Akshay. Have a good day.
Thank you. Next question is from the line of Abhisar Jain from Monarch AIF. Please go ahead.
Yeah. Hi, team. So first question is on the gross margin side. I think in this quarter, it seems that there was some pressure on the gross margin, which impacted the EBITDA margin also by around 200 bits sequentially. So was that also to do with the disruption that you saw because of the GST, or there were some other things on the raw material side which has impacted this?
There's no major reason that we can point to. It's more like just inventory up down. And also there is a slight increase in raw material prices, but that's not a major contributing factor. I think it's just quarterly up down. No significant change.
Understood. And actually, in that context, for the full year, do we expect the margins to be any different versus your yearly trends?
There's no significant change in the operating conditions or environment in the company. So overall, any plus or minus is normalized in coming quarters.
Okay. But I believe there is little higher margin in the export side, and exports are little under pressure in H1. Was that something of a impact also, which may have seeped into the margin?
Little bit, but then the rupee is also fallen, so that should have also helped us. So it's a bit difficult to give you a proper answer.
Understood. And the other one is on the finance cost. So in Q1, you guys had called out that there was 10.6 crore MTM provision on the euro currency loan. So I believe the euro, has further kind of appreciated against the rupee has appreciated further. So can you just point out to that MTM number for H1 now or for Q2 separately? Whatever.
Yeah, it has compounded a little bit, but not to the extent of Q1.
Yeah, but any number there for Q2, Akshay? Is it like 4 crore odd?
Yeah, something like that. Yeah.
Okay. Understood. And just last one on, I understand that you're not able to provide any great outlook on the export side, but whatever headway we had made in the last 3-4 years, having grown our exports meaningfully. So I understand that must be by penetrating new markets and of course newer clients. So is that thing continues to remain on track, and barring whatever disruption this year because of global issues, tariffs, etc., so much noise there, but over a medium term, the the long-term initiatives of penetrating in exports should pay off well for us. I wanted that direction from you, please.
Yeah, that's very much continuing, and we are keeping a positive outlook.
Mm-hmm.
Yeah.
And actually, just on Chennai facility, any update you can provide on how the ramp-up is happening?
Chennai is going quite well. The overall working and quality and everything in the plant is very stable, and we are entering into more and more customers, and some of the large accounts where there's audit and approval and trial and everything which is required, which takes some time. Those are also progressing quite well, and as those ramp up, then we should come to full utilization in coming quarters. So overall in Chennai, we're not displeased with the progress.
What utilization we are at right now in H1 say or Q2 in Chennai?
Factory-wise, we don't really share, but it's about about 50% or so. 40-50%.
Okay. Understood. Thank you so much, Akshay, for answering all the questions.
Thank you.
Thank you. Next question is from the line of Vipul Shah from RW Equity. Please go ahead.
Thanks for the opportunity. I must say it would have been really, hopeful for the, Akshay, you and your dad as well, and the entire family to see that for the first time, sort of TCPL is lagging behind in TTM growth. I've been a huge fan of the company and still remain. So one thing I just wanted to check, you mentioned about the fact that there was a lot of hard work which had gone to develop the US client. Hello, can you hear me?
Yeah, I'm listening.
Yeah, so you mentioned that there was a lot of hard work, which had gone to develop the US markets. I also noted that there was a participation from the company in one of the largest US trade fairs as well. So right now, the tariff situation being what it is, if as we are hearing, if there is a sort of a trade deal or a consensus which is reached between both the governments, what would be sort of the lead time for the company to, generate some meaningful exposure to the US, or will you have to start the process all over again?
Yeah. Hi, Vipul, Vidur here. So basically, we already have existing business in the US, and our clients, although the tariff was introduced, they haven't really stopped business. They've obviously taken cognizance of the fact that the tariff is there, and they have limited the new developments. But the existing business, continues, and they also do understand that it's a deeper macro issue, and it will eventually get sorted out. India-US relations would have that understanding developed. So, it's not like we'll have to restart all over again. And, we've kept touch with our clients because, like you mentioned, we've taken part in trade fairs and put in significant effort into development of this market over the last few years. So we did keep in touch with customers, and we did continue supplying as well to a few of them. So, although it is small now, if the trade deal is announced and the tariff, even if it drops to half of what it is now, it could be even lower. But even if it is half, it could bring about significant scope for business. So it shouldn't take a very long time. And say if it's announced in November sometime, we should be up and running with increased business by the end of the financial year. So
basically a couple of months, I think.
Yeah.
Got it. No, that's quite heartening to hear. One more question I had is, sorry, I actually joined the call a bit late, so I missed the opening remark. At least could you give us a sense as to this quarter, what has hurt the company more in terms of revenue being flattish, whether it is sort of the export which business revenues which have sort of hurt us more, or whether it's domestic?
More the export, but the domestic, we were expecting better, and it didn't pan out as well, thanks to all the GST up-down that happened. So that threw things a little bit into a toss.
Got it. All right. Thanks a lot, guys.
Thank you. Participants, to ask a question, you may press star and one. As there are no further questions from the participants, I now hand the conference over to the management for the closing comments.
Thank you. I hope we have been able to answer all your questions. Should you need any further clarifications or if you'd like to know more about the company, please feel free to contact us or CDR India. Thank you again for taking the time to join us on this call. We look forward to interacting with you in the next quarter. Thank you.
On behalf of TCPL Packaging Limited, that concludes this conference. Thank you all for joining us, and you may now disconnect your lines.